Hello and welcome. Today is the third and final video of a short series I'm doing aimed at people getting ready for the FMI exam, specifically the first FMI exam, the AFM, based on some old questions from the Financial Modeling World Cup. So if you haven't seen the first two, you probably want to watch those first, but I'll just do a quick recap. So in those, we built our three-statement model. So we built an income statement, cash flow, and balance sheet forecast with various different supporting schedules, revenue, operating costs, capex and depreciation, debt and equity to support those. So today we're just going to add a few more little details to that, and these little details I've taken from the follow-up with AFM question. This is from the second round of the FMWC back in October of 2020. So we're going to be taking the details about income taxes, the revolver, and the scenarios from there. So I'll just show you quickly, basically the same, oops, ignore that, I'll come back to that later. Here's what I want, assumptions. Basically the same kind of sheet as the one I left you with last time, but a couple of things I've added. So one, the revolver was just showing 0% here because it was not in use, so I've plugged in the assumed 5% rate. And then tax rate, I've plugged in the assumed 29%, and we're also told to assume that the company's pre-tax income for government purposes will be 0.2 million euro lower than its pre-tax income for accounting purposes every year in the forecast due to temporary timing differences. And tax loss credits are not carried forward or backwards. So if you make a loss, you just don't pay tax that year, but you still pay tax on past and future profits exactly the same way, which is not typical in the real world, but just a simple version for this question. So we've done that, and then we've added scenarios. So the original model just had this sales per store growth rate and then a couple of other things below. I've now added in beneath that 3 scenarios: base case, downside, and high growth. So the base case matches the existing assumptions, which are what's already linked in the model, and then the downside and high growth. Now this is obviously kind of the minimum possible way to have 3 different scenarios, is just to have one single variable that changes between the scenarios, but you'll see the setup and the process is all kind of the same for each one. So consider this just a proof of concept. But if you wanted to have, 3 different scenarios where you vary your assumptions in a more kind of realistic, more holistic kind of way. Like, for example, if you're doing worse, you'd probably adjust your additional capex. If some of these payments are non-mandatory, you might start paying more or less of your debt off, that kind of thing. So lots of assumptions could change between scenarios. In this case, we're just changing the one assumption, which is sales per store growth rate. And specifically, this was kind of anticipating a catastrophe scenario where the government imposes a big shutdown. So sales per store go down by 50%, then by another 10% the next year, and then resume the sort of gradual 3% growth. And then we've just added in one other high growth scenario where they go up by 20% every year. It's probably not quite typical to have your scenarios be this far apart, but no reason not to cover all bases. So the first thing I'm going to do, like I said, this top row is what's already wired into the model, but what I want this to be is a selector based on these. So the first thing I'm going to do is add one new assumption, which is what is the active scenario. Oops. And I'll just take the format from up here and just put the border all the way around it. And then I'll link this. Actually, let me just give the list of scenarios a name, make it easier and safer to refer to later. And if I were adding 3 different scenarios on various other things, it would be a good idea to enter these names just in one place and then link to it in the other ones. But again, I'm only doing one here. So here I'm going to just have a drop down list pointing to that named range. So I've got base case, upside, downside, and you'll see I've included a number in the name just to kind of simplify the formula here. So then here I'm going to make this index, an index on the 3 rows below, and I'm just going to take left of this. And you could, lots of other optional things you could add here. You could add left comma 1 to say you want the first character, but actually left does that by default. You could multiply by 1 to force the text into a number, but again, because you're putting it as the second argument to index where it's expecting a number, Excel will do that anyway. So you can just keep it tight and do it that way. Now these are no longer input cells, they're calculation cells. So I'm just going to take off the input formatting. So I'll drop that. Remove the fill and remove the font color. Hit OK. All good. Okay, so that's that. And then I think I mentioned when I was doing the print setup, but very, very important is to make sure that on every output page that can print, the scenario is visible, because what you really, really, really don't want is that one person has your model and it says 2024 sales are 600 million, and another person has your model and it says the 2024 sales are 1.5 billion, and another person has your model and it says no, they're not, they're 3.2 billion. So very important to have just up here somewhere something like this. I'm just going to say equals active scenario. And actually, sorry, I gave the list of scenarios a name, but I'll give this a name as well. I'll call it ActScen. So then let's try again. Active scenario. And I'm just going to use mid ActScen. So I'm just skipping over. So I've got a number space dash space. So I'm going to skip the first 4 characters. Put 100. And I'll right align that, and I'm going to make it. It's already bold. I'm going to make it also red because I want that to stand out. It's a very, very, very important thing to highlight. And then I'm just going to take that and put the exact same thing here, here, and here. And so now, if I print these off, I'll see right here, active scenario, high growth. And even if somebody should somehow miss it, as long as it's in the same place in every sheet, if somebody says, hey, I've got this thing that says XYZ number, can you explain that to me? You can just say to them, okay, well, just look in the top right. Is it high growth? You know, look in the bottom right. You can't see it because it's behind my face, but anyway, we'll go over here where you have the print settings that say, you know, this is the name of the file. Are you looking at V3? Are you looking at V4, etc. And that way you can just make sure you're on the same page as anyone who's looking at a PDF or a printout or anything like that. So that is that. Now, then this page that I accidentally showed you earlier. So I didn't want to spend time on the kind of design setup, but let's just say that you want, in addition to being able to look at the entire model in any one scenario, let's say you want for a sort of executive summary to lay out a few key variables, like here's our final year revenue and the revenue CAGR, and our final year net income and the CAGR of that. CAGR, if you don't know, is compound annualized growth rate. What's our net working capital, what's our total debt, and what's the total amount that gets paid out in dividends over the forecast period. So let's say you want it doesn't have to be these specific ones. I just picked those not completely at random because they're things you'd want to know, but it's a semi-arbitrary choice. But you've got a handful of variables that you're interested in that you want to be able to see across the different scenarios. So the way you can do that is by building a data table. So I've just captured these numbers. So these ones from the income statement, this from the balance sheet, this from the balance sheet, and this from the cash flow statement. And I want to say, what would those values be if this were number 1, if this were number 2, and if this were number 3? Now, you can do that with a data table. So you lay it out like this. You have your scenarios across the top, and you have your calculated values down here, and then or the other way around. You can have your scenarios down here and your calculated values up here. And you go Alt-DT for data table, and you tell Excel for this row, I want to basically replace each of these 3 values or each of these n values into a certain cell, and then calculate what these things would become in those circumstances. Now, the one challenge with it is, and this is a real challenge when you've got an assumption sheet in one place and a sheet calculating tables in another place, is that your scenario selector, which is the assumption cell that's changing, has to be on the sheet where you're doing the data table. So you can calculate all your data tables on your assumptions sheet, but obviously that kind of goes against the idea of having an assumptions sheet that's separate from your calculation sheet. One neat little workaround that you can do is if I take this over here, so I just cut and paste, so put it here, put it here. I'll just label that again over here, active scenario. So if you want to be able to reference something in multiple places and also change it in multiple places, so you could, I could have something here that just links back to there, and I could format it in the same way, but then if I change this, it won't change back here and they get out of sync and it causes confusion. So that's not the way to go, but what you can do is I've named that, right? Yes, I have. So what I can do is I can insert an ActiveX control. And an ActiveX control is basically one of the few ways to have like real two-way communication in Excel, which makes it super useful. So basically the idea is, well, let me just do the setup first and then I'll explain a little more. So let's go properties. Two things I'm interested in. One is the linked cell, and that's going to be active scenario, and then the list fill range is going to be scenarios. And then let me just show you how that works, and then I'll explain a little more. So now I've got a drop down where the three values are this named range scenarios, and where the output, so whatever I select in here, becomes the value over here. So, and that works both ways. So if I change it here from downside to high growth, over here it now says high growth. If I change it here from high growth to base case, I come back over here and it now says base case. So like I said, this is kind of genuine two-way communication. And now there's a couple of other, so if you have an ActiveX control like this, if you want to be able to change the settings, you got to go into design mode. And then a couple of things that we could do here just to make it a little nicer. One is we can format it so that it looks like an assumption. There's a limited palette here, but you can get something that's pretty close. And then for color is the font color. Let's go palette and something like that. It's probably maybe darker. Anyway, something like that. No, that's too dark. All right, fine. Let's just say that's close enough. And I'll probably, where is my alignment? I find it a little hard to, find the fields in this thing. So I guess it's probably called text align. There it is. So that's align center. Okay, so now it looks a little bit more like that. Does it print? It does print. So, and the nice thing about this is, if you want to, you can actually have one of these on, each sheet, or on, just on your schedules tab or something like that, somewhere, off outside the print range. It basically allows you can have many different ActiveX controls all linked to this cell, and you'll have basically all of them will move in sync. So if I change one of them, that'll change the underlying cell, and that then feeds back into all the other ones. So you can have the ability to sort of switch scenarios on every tab. And important, of course, when you're done with design mode, you got to go back out of design mode so that you can actually use it again as a drop down. So that's your nice setup there. And now that we have this over here, but also still on the assumptions tab, I can now do this data table, where I guess really I should put the full names here for this to work. So we'll do this. It's a bit squeezed, but don't worry, because this is not the display part of it. So I'll go data table, and the row input cell is this. I'll hit OK, hit calculate, and now I'm just going to temporarily fit those to columns so I can see, yes, those are the numbers that I looked at in the different scenarios when I changed it around. And so then I can come up here and say, okay, that points to there, this points to here, this points to here, this points to here, and this one points to here. And then Little trick if you've got a setup like this where these three are in consecutive columns, but here you've got some empty gutter columns like this, what you can do is first Control C, Control V, and then Control X, Control V. We'll move it over. It's pointing at D24. Oh, whoops, sorry, I had them all starting off. So a fun thing with the data table that can be a little confusing is you have your input values here and then the three different scenarios, but obviously the input values are going to match the active scenario. So I had it pointing to the input values rather than to the base case scenario. So that's my bad, but that's also easy to fix. So let's just come here. I'm going to replace equals C with equal D. And then I'll try that trick again. So Control C, Control V, and then Control X, Control V. That gives me the downside, and then same thing for high growth. And then if I wanted to fill in the CAGR here, I won't do all of these, but I can say 2024 revenue, divided by 2019 revenue. So that's 5 years of growth to the power of 1 over 5 minus 1. So that's the equivalent of 4.5% annualized growth. And if I lock that reference in, oops, sorry, lock that. Keep pressing F5 instead of F4. Lock that reference in. I can do that, and well, I said I wasn't going to do them all, but actually it's really only two things, so fine, I will just do them all for the sake of completeness. And my net income 2019 is over there. Okay, so that way you've got kind of nice little summary where whichever scenario you have active, you can kind of look across all three for the main highlights. So I think that's everything to say about scenarios. Let's go and talk about tax. This one's actually relatively simple. So we're going to go over to our schedules tab, drop in another schedule. So we'll call it tax schedule. And now let's just quickly kind of look at where this is going to impact. So first of all, we've got our tax line on our income statement. Now, I think this must have been laid out as a little bit of a hint for this section, having current taxes and deferred income taxes as separate lines here. I think it would be more conventional to just have tax as one line, and the understanding that if you have, tax here versus tax on a direct cash flow statement, say, that this would be obviously accounting tax on your income statement, and this would be tax actually payable on your cash flow statement. In this case, we're going indirect, so what you have instead is just sort of the adjustment piece coming out. But to make it easier, this has been split up. So, your income tax is composed of your current taxes and your deferred income taxes. So that's fine. So let's just go earnings before tax. Yeah, we just called it EBT, fine. Start with 2020 because that's the first forecast year. And it's this line here. Carry across. I'll take this number format here. Do that. And let's just call this EBT accounting, EBT adjustment, which is going to be the minus 2 million we talked about here, reduction in EBT for government purposes, and I'll F4 to lock that in, and then we'll call it EBT government. Sum this up, carry across. So then our, I'll say tax. How do I want to do it? Yeah, I guess I'll do it the way they're doing it. So we'll say current tax. No, we'll say accounting tax, which is just going to be your earnings before tax times the tax rate. But with a small warning to be careful here, because here we've got all positive profit, but in your catastrophe scenario, it all goes bad. Sorry, why does that come back to schedules in 3? I wanted this. Oh, what a mess. And so we're told basically there's no kind of tax loss credit to carry forward or backward or anywhere else around, and so it's just going to be our accounting tax will be the max of this and 0. So in other words, if we're making a loss, we're not getting a tax refund. And then we'll just call it government tax, or I guess what they call it, current tax. Will just be the same thing, but pointing at this cell here. And then deferred tax is just going to be the difference. And carry across. Now the reason that I did not do deferred tax on just tax rate times this is because if I go to my negative case, you see my accounting tax and my current tax are both 0, and so there's not actually any deferred tax asset, deferred tax liability associated with this timing difference, because it's just making the difference between, you know, a little bit negative and a little bit more negative, well, a lot negative and a little bit more negative, and so it doesn't make any difference to the tax. In this case, in a scenario where you could carry losses forward or backwards, it still could, but that's not the one we're in. So let's carry on. So we got to plug this in. So first in our income statement, current taxes, and we'll just quickly double check the sign. Yes, it's all supposed to be positive, so that's good. That carries through, and then we take back out our deferred income taxes, or sorry, add back in, I should say. And now if you haven't seen the first couple of videos, this alarming red is saying, help, your balance sheet is out of balance. And if you look carefully, you'll see it is out of balance by the amount of these deferred income taxes. And that's because your deferred income taxes need to add to a deferred tax liability line on your balance sheet. So the last thing we need to do is deferred tax liability balance. And we'll just do opening, change, and closing. And for the closing, we'll take the last historical year, and I'll, as usual, make that red, very different format from the rest. And then opening balance carries over the closing. This sums up those. And then this just points to that. And then if I put this in here, that should put my balance sheet back in balance. And it does. So again, just another advantage of having the balance sheet set up that way and kind of adding in just one piece at a time rather than building the balance sheet at the end after you've built all your schedules. Just makes it easy to see, you know, if you don't have a good intuition for, you know, is this supposed to be growing or shrinking if I've got, you know, the difference in this direction, I don't know, I'm not sure. Well, it's very easy to see once you build it this way. If you get the sign wrong, you'll immediately be able to spot it. Okay, so that's the tax schedule. I'm just going to extend the print area to catch that. And looks like I might need to adjust the page break to make sure that that starts at the top of the page. So, whoops. That's a little annoying. My view buttons are down here behind my face. Never mind, I'll just move that, click here. And then there we go. And then back to normal. Okay, so that's taxes. And then let's just see. Last thing is the revolver. So let's go do that. So we're going to add to our debt schedule for that. So I'll just throw in a few more lines here. Hopefully I'll have room before I break over onto a new page. But won't worry too much about that. Revolver. Now, let's think this through quickly. So, again, if you think, like I said, this is kind of at the simpler end of things for the revolver, but we've got basically any negative cash balance becomes a positive revolver balance, and as soon as we have positive cash balance again, we use it to pay off the revolver until it's cleared. So that's a cash sweep. No minimum cash balance, so that's again on the simpler end. We're not given a revolver limit, so just assume that it's as big as it needs to get over the life of the model for the time being. So what I'm going to do is I'm going to say I'm going to figure out my closing cash before revolver issuance and repayment. So I'm going to say cash flow pre-revolver issuance / payment. And that is going to be, let's come over to my cash flow statement and basically grab everything except the revolver. So I've got my operating cash flows, everything except the revolver principal. So I'll take all of my operating, all of my investing, and then I'll sum everything except the revolver there. Carry that across. So keep the number of formats consistent. And then I'll have closing cash pre-revolver payment, which is going to be this plus the opening balance. I'll take that from the cash flow statement as well, just so I'm looking all in the one place. So then we'll have opening issuance repayment closing. So again, I'll just take all of this. I will point to bank debt revolver 2019, and then for my issuance and repayment. So I'm just going to say if this, I'll show you how to simplify this in a minute, but just start with the most basic logic. If my cash position is less than 0, then I need to draw down my cash position. So negative of that. And if my cash position is positive, then I want to pay off. So it'll be min of, minus the smaller of my opening balance and the cash that I have. Now obviously the revolver is not actually used in the base case, so let's go into a more alarming mode. Downside, oops, yes, we got downside. Oh, sorry, yes, I remember I looked at this when I was thinking about this earlier. So I made a mistake here because we only had profits last time. So I just did the dividends as 50% of net income to common, but obviously we're not going to pay out negative dividends, so this should be max, 0. So that was bailing me out, which was stopping my cash from going negative. But now that I've fixed that, yes, now I'm pulling on the revolver. So that is more like what I was expecting. So, sorry, what was I doing now? Yeah, so this is working fine. So I've got a negative balance of 11 million, so I draw on the revolver to cover that. Then let's just kind of quickly check. Let's say that I have 6 million the next year, so I repay that amount. I've got 5 million left, and then got negative the next year, so I draw all that. So that's all working fine. So then I need to calculate my interest. Okay, so it looks like my debt schedule is going to need to become a 2-pager, but that's fine. Let's just do that now quickly before I forget. So we'll go back to my page break preview view. Put that up to there. And I'll just, to keep consistent, I will copy this down. Actually, this and the blank line after. No, sorry, never mind. Don't need the blank line after because I already had a blank line. Put that back up above there and just make this Dutch schedule continued. If I had a little bit more time, like at the end of an FMI exam, or in the real world, just as the model was stabilizing, I would probably try to come back and tidy some of this up again. So like, for example, the picky average that we added earlier, you don't need to have that. That was just for reference. If you do the depreciation in the sort of compact calculation, then obviously you don't need all these schedules and so on. But for now, I'm just gonna I'll just make sure everything is on, starts on its own page, and we'll leave the rest. So do that, and then I'll go back to normal view. So the interest. Now, if you're an experienced financial modeler, you'll immediately know that this interest calculation is going to create a circularity. If you're not an experienced financial modeler, it might take you a minute to work out why that is. But so let's just quickly do it. So we're going to have the average of the opening and the closing balance times times this 5%. Carry it across. So what is the circularity? Well, my cash flow pre-revolver includes my operating cash flow, which includes my net income with adjustments, and my net income includes my interest expense. And so as soon as I update this line to include revolver interest, my cash flow available that determines my revolver balance is going to be determined by my interest, which is in turn determined by the balance. And so those two are circular. So let me just plug it all in, and we can see what happens. So first thing, we'll come over here and that. And now, depending on the model you inherit, it may or may not have this sort of suppressed. But first thing, when you create a circularity in Excel, you'll get this error: the one or more circular references where a formula refers to its own cell, either directly or indirectly, might cause them to calculate incorrectly. Try removing these references or removing the formulas to different cells. And it gives you this kind of attempt to trace where it's going on, and it just zeroes out the formula. So now I'll talk about how to avoid the circularity in a minute, but it's still relatively common practice to just do this as an iterative calculation. So we're going to go here. So tools, options, formulas, enable iterative calculations, and the default settings of 100 and 0.001 should be fine. So hit OK. And now that calculates as before, and then I can carry across here. And now you see, well, actually, sorry, you don't see because I didn't give you time to look it up beforehand. But so let's take a quick look. So here, let's say my ending revolver balance is 222.6. And then by the time I factor in the interest in all of it, I've now got a closing balance of 236. So this interest has now added into my cash requirements. So that's where it hits there. Where it hits here is just issuance and repayment. So let's do that. And let's make sure I get the sign right. So this is increase in the balance is cash coming. So no need to add a negative sign there. Just carry that across. That says alarm, alarm, but that's okay. I just need to go and get the closing balance here. Carry that across, and then I'm back in balance. Hooray. Okay, all right, I think that's all I've got for today. Like I said, that's sort of the last piece of the series. So if you're getting ready for the FMI exams in less than 2 weeks, I think is the next one, then best of luck with that. And I'll be back sometime soon with a slightly less study focused and maybe even more fun video. Thanks for watching.